The U.S. Federal Reserve's economic stimulus will continue for now, but Asia's emerging economies could very well be at risk when the Fed finally pulls the plug. The question is, what will happen to the Philippines, perhaps? Barnaby investigates the impact.
There was a wave of relief across global financial markets in September when the U.S. Federal Reserve announced its decision to keep buying bonds to the tune of $85 billion a month. Stock market prices soared again earlier this week on speculations that decision will likely hold until next year as the U.S. unemployment rate dipped to its lowest in almost 5 years. Emerging economies, particularly in Asia, have been holding their breaths in anticipation of the Fed scaling back its stimulus program as the U.S. economy showed signs of recovery. The question now is not if, but when it'll happen.
I'm more concerned about the countries that need the U.S. money, because that's what's keeping their economies strong, that's what's keeping their exchange rate stable. When that money is no longer available, the economy will slow down and their exchange rate will depreciate.
Countries like Indonesia and India will likely suffer a huge blow, but not the Philippines, according to Felipe Medalla, a board member at the Central Bank of the Philippines. The Philippines has outpaced the economic growth of most of its Asian neighbors so far this year, expanding at more than 7% in the first half. Economists and the country's central bank agree any tapering of economic stimulus by the U.S. Federal Reserve is unlikely to have any dire effects on the local economy.
What we're looking at are second-order effects, not the direct impact on the Philippines. And in fact, the direct impact on the Philippines is slightly positive to the extent that these interest rates are maybe too low to begin with, and slightly higher interest rates arising from the tapering may actually be healthy for long-run financial stability.
The worst that can happen is a depreciation of the Philippine peso. But with almost $84 billion in foreign currency reserves, Medalla says there isn't a chance the country's central bank is going to let its value take a sharp downturn. Barnaby, CCTV, Manila.